Hey, Bitcoin and crypto traders, we have a very hard and fast rejection from the resistance level that everybody is watching right around 13,900. We're seeing correlations tick back again with the broader markets. We'll look at it all in just a flash. So we'll start it off looking at the dollar because overnight the dollar started to matter a lot more to all of our asset classes. And it was this move right here on the hourly time frame where it really started to stand out. So that move happened at 1 a.m. Eastern and we just had an 8-hour bull move up. And what that does is increases the odds of a daily inverse head and shoulders. Even if we reject from 93.90 and set a daily lower high, there's a lot of space for that higher low to try and form now, which increases the odds that the bulls can form a weekly higher low compared to 91.74. Now, there is certainly still more proving that needs to be done with a clear higher low and higher high on the daily, but it's obviously the most bullish day we have seen in the dollar over the last 9 trading days. So, essentially, for the first time in 9 days, everybody says, uh-oh, we care about the dollar now. So again, this is what it did at 1 a.m. to 8 a.m. And if you look at gold, at that same point in time, it fell off a cliff. And if you look at the S&P 500, at that same time, it fell off a cliff. And oil futures fell off a cliff. So everybody went inverse to the dollar again, just like we saw back a month or two ago when it was tick for tick for a short period of time for 8 hours. That happened again. So Bitcoin dropped with it. Not as fast, and it was holding up way better. You can see this is where it started. And the timing here is not ideal for bulls because, again, it is a double top with the resistance level. We hit the resistance double top. We consolidated. No red flag whatsoever. It's not like sell bots triggered and we had a huge flush down. It was very healthy consolidation. The dollar started bouncing. Bitcoin got a little bit weaker and weaker. It was still fine. All the way to right here at 6 a.m., it was still fine. It was holding the 4-hour, 12-period EMA. No red flags whatsoever. And then from 6 to 8, it got real ugly. And we escalated things to the downside. And we hit first hourly oversold conditions from that significant bull move. So we know our back burner trade, we look for first hourly oversold conditions to buy the dip, which I did do, scaled into 2 orders. The first one at 13,200, the next one on 13,000 breaking. Had an average roughly 13,100, sold half of the bounce on the initial move up, just under 13,200. So now I've got an average just above 13,000. And again, I've got my long-term no touch, my swing position from 10,700, and my day trading position on this bounce play. So I'm giving time for this bounce to play out. But again, I am not comfortable with the fact that we double topped and pulled back this significantly. There's no major red flags on the daily time frame. It's just not ideal to latch onto that narrative because, again, think psychologically. You have bulls saying, uh-oh, we rejected from resistance. What if that's our top and we're going to pull back over the next couple months? You have bears saying, there's our clear resistance level. Let's short. We have little to lose in the sense that our stop level is so clear. The S&P 500 is important from here because if we were to break this weekly support, it's a big red flag. This is an equilibrium. We have big tech sector earnings tomorrow, which are going to matter. And then we have the election in 6 days, which is certainly going to matter. If this support level breaks, we confirm a weekly downtrend and monthly consolidation in stocks will then be underway convincingly. We don't want to see that happen. And that would also mean potentially that the dollar is confirming a weekly trend change if that were to happen. So again, worst case scenario for the bulls at this point would be a rejection from this resistance and a move back down. I mean, we need to drop a couple $1,000 from here if it's going to be a really convincing rejection, but we cannot rule out the possibility of this 2-month equilibrium through 2021. We would need to see significant stock market weakness and significant asset weakness and a big dollar bounce, if that were going to take place, it's a low probability possibility that's just right in the back of my mind. And if we break 14,000, then I can eliminate that from the back of my mind, but it's still there as long as we are rejecting. So from here, technically speaking, we're still in a 4-hour uptrend, which seems very odd due to the size of the pullback, but we went straight from 12,700 to 13,800. This is a 4-hour high or low trying to form. That being said, the size of the pullback is such at this point that we would then be looking for a 4-hour lower high and tightening 4-hour range. So that's what I'm expecting. And if you are a uncertain bull or if you are a bear, you're going to be looking at that lower high to either exit some long position or for bears to make an entry based off that resistance, anticipating the 4-hour lower high is the most likely scenario. So I personally may look to exit some of my swing position on that lower high. I will certainly exit my oversold hourly bounce position into this bounce. Maybe 13,300 will be my little goal for just that couple percent flip. But as far as my swing position from 10,700, if I want to eliminate some risk, I'm doing so on a 4-hour lower high. 30-minute time frame right now is nice and clear, equilibrium, if we cannot break 13,250. Right now we're in a scenario where we are absolutely still correlated to the broader market. That being said, we are stronger than SPY. So every time SPY goes a step forward, Bitcoin's going 2 steps forward. And every time SPY takes 2 steps back, Bitcoin's only going 1 step back. So we have a half-hour tightening range. We're either going to confirm a half-hour trend change and zoom out to watch the 4-hour for that lower high, or we're going to reject from resistance right now and keep this half-hour equilibrium continuing to form. So let's just look at the 15-minute time frame and what I'm talking about here with this SPY correlation. So 15-minute time frame, SPY 15-minute bounce into a new low of the day, lower low. Now that lower low did not get much follow through, but it did break support. And Bitcoin, clear higher low. So there is the difference, and we'll see if that difference can hold up. We've been watching Bitcoin have a bullish correlation to everything else we've been watching for a while now, and obviously the bulls want to see that keep up. The Bitcoin dominance chart, daily bull flag confirmed, 4-hour time frame, pulling back here. The altcoin bulls want to see this 4-hour equilibrium on Bitcoin. The best environment for altcoin bulls to try and play some catch up is a 4-hour sideways range in an equilibrium. So if that takes place, watch for BTC pairings to see oversold bounces. Why is a sideways range the best on Bitcoin for the altcoins? Because in this current market environment, when Bitcoin's going up, it has all eyes, all attention, CNBC coverage, headlines, etc. When it's going down, the entire crypto space is going down. But when it's sideways, that's when profits can get redistributed to other places. ETH/USD trying to double bottom at 382 and 380. Daily, I would still consider this the same daily consolidation that started at 421. No daily high or low has been set. And I would call anything above 364.04 a daily high or low. I've said many times fairly adamantly, I have no interest in ETH as a bull as long as this is in a downtrend, ETH BTC. I'm keeping it simple. It's a very simple statement. That way I don't have to, every single time I'm trying to trade, every morning, every night when I'm looking at the charts, should I be looking at ETH? Is now the time to be looking at ETH? No, it's very simple. If we're in a daily downtrend, I'm not looking at ETH. For me, I like that kind of clarity. For other people that are day trading altcoins a lot more and a lot more active in the space, that's not going to apply to you. For someone taking less trades in that space, that definitely should apply to you. So anything under 3222 is just a daily lower high. And I know that we will see ETH/USD catch up to BTC/USD on the next time we bounce here, but I'll just be looking for another daily lower high to form. 4-hour time frame, weak bounces, nothing for the bulls just yet to get excited about. And we got that 4-hour 12-period EMA resistance, which has been rejecting the price for 4 days as well. Link USD. So I'm still watching this little channel, and we've got our resistance line that rejected the price, and we got our support line that hasn't come into play on this period of consolidation, but another leg down, and it will be in play. And again, just a little bit cautious, knowing we are looking for a weekly lower high on Link. High, low, and looking for that lower high. And when we lose the daily uptrend, that weekly lower high will be set. But still holding that uptrend, and I would still consider anything above 978 as a daily high or low. Next time we bounce on all these altcoins, same as Bitcoin, we're watching for 4-hour lower highs to form. And again, the bears are going to be watching for those 4-hour lower highs as well to make entries. BNB, we're going to have a volume and volatility spike here soon. And I can say that because things are getting extremely tight. So I would be watching this pattern right here. Daily support was 29.88. We broke it by 8 pennies. We'll consider that a double bottom. Still trying to hold this uptrend line. If we get a more convincing bear break of 29.80, we will call it a loss of the daily uptrend, and we will zoom out, and we will anticipate our weekly lower high being set, and then weekly consolidation will be likely. 4-hour time frame, just looking for a lower high next bounce. Bears are watching for a lower high entry. I don't even know if you can short Binance. I remember for a while you couldn't, but if you could, bears will be watching for that 4-hour lower high. XMR USD, again, any bull breaks with a lack of follow through, automatic red flag for bulls. We're still in a daily uptrend. It doesn't mean run for the exits, but it means be cautious because we confirmed a weekly bull flag with no follow through. That shows us the bulls are getting a bit tired. Anything above 116.79 is a daily high or low. But I'm in some USMJ positions that did the same thing, broke weekly resistance with no follow through, and that is making me more cautious in those names and exiting a little bit of bullish positions. So it's all about 116.79, and just like everybody else, we will look for a 4-hour lower high next time we bounce. And I can see it's already a bit weaker than Bitcoin, having not found a bottom over the last couple hours convincingly, while Bitcoin obviously has. LTC USD, daily bull flag confirmed, straight into a pullback. Just poor timing with the market pullback right on that bull break taking place. But again, bull breaks with a lack of follow through means be cautious. We then dropped down and broke $55 support only by 11 cents, but a bull break straight into a support break means caution. And same thing for LTC BTC. If we do not change the daily trend, I do not care what LTC USD is doing. We have to change the Bitcoin pairing trends on the daily time frame to have confidence in that these moves are not just little short-term moves that fizzle out. If we want follow-through, daily trend changes on ETH BTC and LTC BTC and whatever altcoin BTC that you're looking at will be needed to shift that momentum. So that's where we stand in the short term. Again, establish your game plans and your mindset. Are you holding through daily consolidation? Are you going to hold through weekly consolidation? We're going to form a weekly high or low unless things collapse. I would be much more comfortable holding through weekly consolidation if we broke 14,000, got a bit of follow through over the resistance level, and then pulled back. That's not the case. So I personally am going to be a little bit more cautious because when I make mistakes, it's usually leaving money on the table and not losing money. So if I am exiting a profitable position and then we keep going, that's me leaving money on the table and still profiting, as opposed to holding my full position. We end up seeing weekly consolidation, and next thing I know, I've given back 15, 20% of the profit that I had from the high. That's just me personally. Everybody has a different game plan. And we'll see what this 4-hour bounce looks like. That's also going to be telling us information. If this 4-hour bounce goes to 13,400 and tops out, it's a very different story than if it goes to 13,600 and tops out. We're watching to see, is continuation for bears more likely or is an equilibrium more likely? I'm personally going to be watching for the equilibrium, but I would be a lot more confident in that if the S&P 500 futures chart could bounce from its crushed 4-hour oversold RSI, which again, Bitcoin bulls are positioned well to benefit from if that could happen. So I appreciate you watching. Do good things. Like, subscribe, share, party, be protective, establish those game plans, write them down, execute them, because emotions can change in this space very quickly. Keep an eye on the dollar, keep an eye on the S&P 500 weekly support, and keep an eye on the prize. Pretty sure this clan of finches, who are certainly new, but I think the sunflowers in the driveway got them populating the area. They were not here last year. They are everywhere.
Every day is just a party.